What's good, YouTube? It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
And today, we're going to be talking about some EV plays that we feel have the potential to outperform Tesla stock this year. The first EV play is Chargepoint. So previously, it was the SPAC, SBE, and now is fully merged, and they actually released their first earnings earlier this month. Earlier in March, since the merger. And that kind of sent the stock tanking. It sent it down 8%. But something that we know is that with the upcoming Biden infrastructure plan, he does have money in there for building out charging stations across the U.S. So therefore, ChargePoint will be a major player in this game. They have solutions for businesses. They have solutions for homes. And they also offer cloud network and software to integrate for the different businesses that would like to utilize their charger services. And also, they have delivered 90 million chargers already. So they're proving that they can take on the task.
Yeah, man. You know, the thing about the SPAC, when it was a SPAC, it was up, I want to say, around $40 a share, right?
Yes.
And now it's sitting at $26. But the crazy part is I've seen it at 18. And so that kind of, strayed me away from investing in this stock. I think with the infrastructure plan that President Biden is going on, hoping to implement, I believe that this would be a great stock to invest in. But I'm not completely sure because there are other charging stations that are out there that probably perform better than ChargePoint at this point. So I would have to do some more research, especially since they've merged after, SBE and become ChargePoint.
I've personally used a ChargePoint charger, and for what it is, it does work well. And I imagine they're working on technologies to make it better, and they have their fast chargers that they're implementing across the country. So people who drive vehicles like the Porsche Taycan, the Lucid Air, those people will be able to utilize those charging stations. Now, if you ask me, the Tesla supercharging station is far ahead of all the competition. But we know that there has to be another player in the game. And if that player is ChargePoint, right now the stock's hanging out around $26, $25. It can and will double.
Yeah, man. And one aspect that I like about it, you can actually partner with ChargePoint and start installing their charging stations and making revenue off of that. So it could be a business opportunity for anybody that's trying to make money off EV outside of stocks. So I definitely like that play, and that could drive sales and revenue as well.
And that's a real way to get some equity in your stocks. But the next stock that we have that we're going to talk about today is currently a SPAC, CCIV. So at the time of this recording, it's hanging around $23. And I'm going to say something similar that I said to ChargePoint. Getting this stock under $25 a share is a bargain. Now, unfortunately, with SPACs, there's usually a dip after the merger. Some of that has to do with earnings reports, amongst other factors that make it drop, like buy the rumor, sell the news. But right now, it's reached its highs, and right now it's hanging around the $23 mark. I think if you get under $25, that's a good deal because they have the best bet of competing against Tesla. Because, come on, let's be honest. As far as EV vehicles, the only ones that really look good in comparison to a Tesla is the Porsche Taycan, which is $150,000. Nobody can reasonably afford. But Lucid does plan to put out the $70,000 model. That might bring some people over the finish line.
Yeah, I mean, I don't have any, super points to add, but I definitely think that CCIV at the $25 range is a great buy-in. The stock is kind of volatile as it's still a SPAC. You mentioned the whole, buy the rumor, sell the news thing, and that's kind of what happened. Once they announced that merger date, everybody sold. The price went up all the way up, I think it was $60, $62. Yes. And you were able to sell that bad boy at $52. So you made a great investment, great investment move. I'm going to stay away from CCIV, but I like the fact that it's an American-based company, which is something that can definitely compete with Tesla because Tesla is also heavy in America.
What do you think about after the merger is complete and the ticker symbol changes? Would that change your mind about investing in the company?
So, my forecast, I think before it actually changes, it's probably going to hit around 50, 55, and then it's going to drop right back down under 30. And I think that's a great buying opportunity. So if you guys want to go ahead and buy right now at the $25 to $30 range and then sell that bad boy at 50, there's going to be a drop. And yeah, it might be, but I definitely want to see some proof of concept. Maybe test drive the car. Maybe see what it looks like on YouTube. A few people test drive it on there. But other than that, man, I'm going to stay away from it now. I think it's too volatile for me.
Okay. But let's talk about why we think these stocks have the potential to outperform Tesla stock this year.
Well, I think there's a lot of hype around it. I mean, the vehicle's very sexy. There's a new player in town, so we're not looking at the Chinese EV anymore, like the Neos. We actually have something that we're growing here. I definitely like that aspect about it, and also it offers only EV. So you have your Fords, your Chevys. They offer one car, a couple cars. I think BMW's coming out some stuff.
Yep.
But the fact that this is an American-based company and it's only specialized in EV gives it a better leverage. So that means that they've actually created, more in-house, more technology, more productivity here versus being a General Motors company.
No, that makes a lot of sense. I mean, for me, it just comes down to this. The market cap that Tesla's at now, and then now that it's in the S&P 500, it is a big ship to move. So Tesla's hanging around the $600 mark. It's been trading at the bottom end of 600 and the upper end of 600 basically this past month. So CCIV currently at $23.
Right.
It could easily go to $40. It may not be so easy for Tesla to hit $900 again. It's possible, I'm bullish on Tesla long term, but this year, I'm not sure if that's going to happen, if it's going to hit that $1,000 a share mark, because I think the most value from Tesla is not going to come from their ability to sell more cars. It's when they can prove themselves as an energy company. So when when Americans start to buy more, energy storage solutions, like in Texas, we had the winter storm and a lot of us wish we had a Tesla power pack. When they find more creative ways to utilize their battery tech, I think that's what's going to push Tesla forward. So, of course, with Battery Day, there comes great news. So maybe the stock will move according to that. But I think we're waiting on the Cybertruck plus some home battery solutions to push Tesla over the edge.
Yeah, I think you hit it on the head with the whole fact that CCIV is still at $20, right? So it definitely has an opportunity to even 5x at this point. Tesla does not have that much room to 5x. Maybe by the end of the year, a lot of people are saying that there's a price target of about $1,500. Now, as Chris mentioned, I'm not sure if I see that. Maybe $1,200 might be a feasible number. But as far as CCIV being able to run up higher, I do agree with that.
And, the same goes for Chargepoint, right?
Yeah.
Right now, there is no big dog in the, EV charging game right now. Well, the big dog is Tesla, but only Teslas utilize that infrastructure.
Right.
So once somebody makes a name for themselves and separates themselves from the pack, I think it's fair game. And if it is Chargepoint, at minimum, expect a 2x.
So you're going to get your Lucid Air. You're going to buy a new Lucid Air, right? And
Yes.
you're going to go to your Chargepoint and charge up your car.
Yes.
And then you're going to invest in the stocks.
Yes.
All right, bet.
At least 100 minimum.
100 to 200. Yep. Let's get it.
All right. Thank you guys for checking out this video. It's your boy, Young Equity Chris.
And it's your boy, Young Equity Devin. Let's get it.
Let's get it.